Good whip around Wednesday, everybody. Hello, Warriors. Hi, Mike, Vlad FX, AJ, Steve, Ingmar. How are you guys? Paul Nash, how are you? Mark, how's it going? Kman's here. Hi, Bran. You don't like whip around Wednesday? Whiplash. Feeling whipped around. Frederick Lindstrom, welcome. Welcome to Face. Okay, let's take a look around. Hello, team. Kay, Blake, how you guys?
Aloha.
Hello, are you in Hawaii now, buddy?
Yeah, I wish, Vic. I wish.
All right.
Good morning,
I hear
Coach.
you had a hot. Hi, Blake. How you doing? I saw in the news what a hot summer the UK had on record. Was it pretty hot? All right. I just want to start with. I'm renaming this, Blake. This, everyone says it's a Widowmaker. It's now
Yeah.
it's now going to be called the Widower Maker, because wives are going to be so shocked by all the money that their husbands made on the way up in natural gas this winter that they're going to have heart attacks.
It
Right?
actually rallied right off of long-term support.
Yeah, I think it's could be a pretty important turn. Um, you know, this was the first wave, right? So if this is, you know, two or B, this is three or C. So it could be. It's embryonic. When I start a campaign trade, I'm expecting new lows. I don't think so here because of this divergence. But anyway, I wanted to start with that. Silver's struggling a little bit. I'm waiting for it to get to Kman's target 4150, but I noticed some short-term divergences. It's a little weaker than gold today. Uh, I don't know, with currencies, it's really, isn't it a coin toss? Here's really the picture. Kind of a rectangle here, right? So it's a coin toss, right? I mean, if we'll get
Range.
some, do you agree, Kay? Kind of a
It's a
coin
range.
toss?
It's a range.
Oh
Range.
yeah, range. I'm gonna have to go to the driving range later
Yeah,
on today.
I mean, I've been saying it for a while now. I think we're going to build
Oh,
a range.
okay.
No, and
Oh,
that's
okay.
exactly where we are on currencies, right?
All right. So, what do you do if it breaks the range? Like under 97.50, is that a sell signal, or is that just going to be another range low?
Wait,
We
wait for the
can't.
wait for the confirmation and then go with it. And we should know now. I mean, by the end of the week, we should know.
Okay,
We've got
good.
a heap of job reports to hit the wires.
Right.
It's on the forefront of everybody's mind, and those numbers will be crunched and put into the models, and then we take the next direction, if there is a direction to be taken. But it will be confirmed. I expect we break the range, whether it is on the top side or the downside, but I don't know where, when. I mean, I don't know which direction, because the job numbers will have to show us.
Yeah. Well, if it lines up with Elliott wave counts, it's going to be a weaker dollar for one more low. Um, if it lines up that way. Anyway, the only thing I took a shot on this morning is I sold some Canada up against, here's old support
Mhm.
right here, right? And that's where we rallied to. Could try it again. But I'm thinking it rolls over one more time. I'm looking for about 630 on it. I don't even know if I'm going to be looking for new lows. The yen, I'm going to wait. I don't think we're going to 152 in the end, but I'm going to wait for one more drive here, here. So why did I select Canada over shorting the yen? Because I think there could be another high here, and it did make a second high, whereas Canada so far has made a lower high. So, it's not rocket science. It's just knowing what markets are leading and which instruments are lagging to give you your preferred longs and shorts. It's like American Idol. You could have a great voice, but if you choose the wrong song and it doesn't suit you, it's going to affect your performance. Well, that's trade selection for us as song choice. And you always want to be short the relative weakness and long the relative strength. Because then, if you're even a little early, it's more forgiving instead of just getting run over. So, okay, how you playing things here today? Okay, you scalping the ranges?
Okay, I'm a little long Aussie, but I did buy dollar yen against it just to eliminate the dollar risk going into the afternoon jolt. And you know what? I took my profit on my gold this morning. Um, I have a level here at 35.44, but also 3600 is going to be
Yeah,
a potential target. And I thought that ahead of the whole report and things, there may be a little bit of profit
profit
taking
taking.
coming, but
Yeah,
I just decided to bank it. I mean, that last bit from 33.43, it's nearly
yeah.
$200. I mean, I thought it was good enough for now. And I'm just going to let the reports play out. Well, scalping I could do. My ID is also, and then I'm looking at those yen crosses. That if we get mild misses, that means that which is going to be good for equity markets, pretty decent for risk, not like all the job reports falling out of bed and like really painting a very ugly picture. Where the dollar will obviously fall against everything. But if we get like mild kind of misses, these yen crosses are still telling me that they are bid, and so that means that in mild misses scenario, I think dollar yen may drop slower or not as far as the dollar may drop versus other currencies. And on the contrary, if we start to see, or if all those reports in the US continue to defy the laws of gravity, I think dollar yen can shoot through much faster than other dollar pairs would rise. So that's a bit the state of mind I'm in right now. Yeah,
Congratulations on the gold trade.
cheers, man.
Bernard Baruch said, "You never go broke taking profits."
No, that's exactly it.
Well
That
said.
that is it basically, and also, yeah, I mean, we can call all kinds of levels,
Yeah,
whether it's 3600 or 4K. I still think it's going to continue, but it's been quite one-sided for a while, and nothing really goes one way.
and I have to say, Kman, the last 3, 4, or 5 months, I don't know how long it's been that you've been buying dips in silver and gold. You've traded it like a master. You've milked it like a cow.
Thank you, man.
All
Um,
right.
that's what we're here for, right? After
Yeah,
all,
yeah, yeah,
to milk the cows.
yeah. Anyway, we're all farmers. So,
Exactly. Singers and
yeah,
farmers.
I used to say when I was a broker, and Blake could relate to this, that my life was like a farmer, up before sunrise, asleep after sundown, except that I nurtured seeds of greed for the harvest of commissions. You like
Mm.
that? Blake, were you like that?
That's quite a saying, Dale. I mean,
Anyway, that was it. So the beach ball, Blake. How? I mean, we were actually breaking under the second wedge for a while yesterday in S&Ps, and I don't know, was it the Google News that brought it back late in the day? Was that released um, during the session?
it
But
was after hours, I believe.
oh, okay,
And that's kind of saved Google and
yeah, Apple,
Apple. Yeah. So those two techs, I mean, Google's at all-time highs right now.
yeah,
So yeah, that's kind of like the saving trade. And the other thing,
Yeah.
I mean, just look at your chart, just real quick, just a quick glance. No, I'm sorry, going back to the S&P. One of the things that I pointed out that we talked about yesterday during the daily roundup and the morning edge is, look, we're creating a higher low. It's not the trend hasn't broken yet. You know the trend's not in jeopardy just yet. I mean, we did have a pullback to start the month. And but we're still, that is a higher low any which way you slice it. I don't know if we're going to hit new highs from here, but there's yeah there's still a lot to look forward to. I believe we're still stretched. I still think that the market's stretched up here, but that doesn't mean that we can't probe into new highs. So
I mean, no one even talked about last week that the Nasdaq, which led it, put in a lower high when S&Ps were put in a high 65.20, and this is not a higher low. It almost looks like a horizontal support level here, and it looks the same in S&Ps as far as under yesterday's lows. That's not going to be healthy for either of them.
that I
So,
agree with. That I
so
agree.
that's all I know. Whether it's going to blow again or not, I don't know. But I do know after yesterday what's going to be like a new bull bear line for the indexes, which I didn't have that information until today, right?
Yeah. Yeah.
So,
And the thing is you pointed out earlier, Dale, and I'll take over the charts here.
okay, all right,
You pointed out earlier about the dollar. I mean, the dollar is sideways. Kman, you've been talking about being in a range. Everything's dependent on what happens this week. I mean, we really kick off today with JOLTS data, and then we're jam packed for the next 2 days because everything's kind of crammed in. Like what we usually get with ADP data, that's coming tomorrow instead of today. So we're going to get JOLTS today, ADP tomorrow, unemployment claims, ISM services. That all comes in tomorrow, and then we have the jobs report, not only in the U.S. but also in Canada. So if there's anything that's going to break us out of the range, oh, by the way, this is the Nat Gas trend line
oh, nice,
that's the long term. That's from early 2024. Yeah, talked about it on the trade-off show a couple weeks ago for Nat Gas. This is a really, really important level that it held. So anyway, but going back to the dollar, the dollar, yeah, we're trying to figure out which way we're going to break, and I think we'll have our answer by the end of the week. It's just important not to get sucked into um, you know buying the
and
dollar. Like the euro just pivoted off of the 116 level where it was supposed to. I mean, that was like really critical support, and you can see with the dollar index, really critical resistance held. It was trend line resistance. That doesn't mean that the euro is going to 120 either right now. It just means that we're stopped up here, and what's going to drive us below 116 is probably economic data, and it could be as early as tomorrow. A lot of people are going to try to wait for Friday, but the fact of the matter is we get so much employment data tomorrow that could be the catalyst that drives the dollar, to new trend lows or back to, its lows for the year, or we start seeing a much bigger recovery in the dollar. So,
yeah,
and how many people? I mean, there's a lot of people that continue to write off the U.S. economy, and I'm not sure that even our jobs data is going to look particularly sour. And so I think that's the one thing. And if it does, that is going to be a catalyst. If we really start to see employment weaken starting this week, then that's just going to add fuel to the fire on the Fed, cutting rates. I mean, right now, if you just go to Forex Analytix, look at the central bank pricing tool that we have here, and you can see that right now there's a 93% chance that we cut on the 25th. I mean, so K-Man, do you think that number is, let's say the data comes in decent. When I say decent, let me quantify that for you. Like, let's say that then the unemployment rate comes in as expected, and we come in at 4.3%. It ticks higher as expected, but let's say we create, you know, 50,000 jobs, or actually, let me take that back. Let's say we create 100,000 jobs. So we beat the number. Unemployment rate does tick up. How much do you think that's going to change from probabilities wise?
Oh, maybe a little bit. But I mean, the probability doesn't matter. Are they going to cut? Yes or no? Probability can be 51% and not 95%. That is just the probability is a reflection of where yields are at. Okay, and the yields are pricing in a cut, and that is probably not going to change unless you print, I don't know, 4.1, 4.2% again, and 150K payrolls, government payrolls still remaining kind of positive, because let's not forget we should have this September month should reflect a lot of those government job cuts as well, more than the minus 10K that we had last time around. And yeah, again, I mean, it can have an effect. It'll have an effect on the dollar if the number beats, of course. But that is just let's forget about the percentages. It's just going to tell the markets, oh, maybe they won't cut at all. And but the way that they have spoken, I would be surprised if they don't cut this time. Unless you get 4.1 and 200K creation of jobs, and also next, and I don't know why it doesn't come out at the same time as the actual NFP report, but it seems like on the 9th of September we are going to have those 2024
Revisions?
2025 revisions, right?
Yeah.
And there also is expected somewhere like a very wide throw of the darts is going to be somewhere between minus 400 and minus 700K revisions, which they will also have before the next FOMC meeting, right? Um, so yeah, I still think it's a done thing, but obviously, if you change, as we call it, the expectations or the percentage of expectations, that means that yields will have gone up, and so it will have a positive reaction on the dollar, obviously, at the
Yeah,
time.
I'm sorry, go ahead.
No, at the time of print, the market will obviously react to a better report. That is for sure.
Yeah. Dale, I want to ask you this really quick. Today, and we were talking about this in the Forex Analytics chat room. We were just talking about, what's happening a little bit later today. And I know this has nothing to do with the markets, but the Epstein victims are all putting together they're doing a press conference. I don't know what time it is, and I've heard it as well that is happening. The question I have is, do you think that Donald Trump, President Trump, is going to try to divert some attention away from that? That's been one of his, things that's been really bothering him. I think we all understand that President Trump doesn't like it when people are talking about him. If he feels that the public's not liking him, and right now that's kind of weighed on public sentiment on him for quite some time. Do you think he's at risk of doing something a little bit, off kilter today, just to try to divert attention? Especially when you have the
What
axis of
my
evil
my
that just.
answer is, why only today? You asked me if he would do something off kilter today,
Mm,
right?
yeah.
So I mean, why just today?
Well, I mean, this has been the one thing that's like kind
Well,
of
yeah,
dragged down his popularity,
yeah.
and so I'm wondering if he's going to do something a little bit
Well, he's taking
crazier
out
than
boats,
normal.
taking out drug boats in Venezuela. That didn't get enough news time. Got a
That
little.
that did you see his post on True Social when China North
Oh,
Korea, Russia, and
yeah.
India all met. He didn't like that either. And I'm
Yeah.
wondering if he's going to do something even more erratic. Maybe, you know, maybe this is the day that he puts military into Chicago. I don't know if it's going to cause any stirs as far as the market is concerned, but I think it's just something just to keep on the back burner as far as the
Yeah.
markets go. Again, I don't think it's going to affect the markets. It's just something that it's kind of festering in the back of my mind about.
Well, I believe, part of what he said was true. China did not liberate themselves from the Japanese. It was American guys on those islands, and then finally the nuke that ended the war for China. So, people, it's almost, our business is kind of like that. Yeah, that was a great trade. What have you done for me lately? Okay, you're only as good as your last call. But there is a lot of truth to that. Because they were in the war their World War II was 8 years, and 20 million people in China died. So, I think it was a long time ago, true, and things have changed, but the facts are the US has liberated the world from Japan and Germany. And people forget, one administration, some bad politics, but the old world order that's being dismantled right now by, seeing Xi and Putin and Kim standing side by side, and that military parade. Um, yeah, there's a lot of huge egos popping around the world that have a lot of power.
Wasn't
So
that
it's nerve wracking.
at one time wasn't that called the axis of evil? I don't know.
Yeah, that was Bush. Yeah, it was. It was
Yeah,
Bush
I
though.
know. I mean, anyway, hey, let's talk about. I want to talk to you guys about a little bit of breakpoints for the market, and I think just so you guys all see this, we go through analysis. Steve, who happens to be here, and we go through analysis every single day with our traders on the morning edge, which comes up in about a little less than an hour. It's a private show for all of the Forex Analytics subscribers. And we go through all these asset classes every day. And then Steve continues on and covers so many other assets after the fact. But you can see a lot of range bound biases right now. And I think the euro, I just want to point out the breakpoints for the euro because this to me is probably the most important chart if you're talking currencies. Yes, the dollar can move against other currencies. Yes, we can see cross rates move, and there are a lot of crosses that I'm very interested in. And matter of fact, if you're in the Forex Analytics chat room, you know exactly where they're at because I post them right here is one. And then not that one, right here is another. So you know exactly where I'm playing those. But as far as the dollar-based currencies go, the euro, this is it. And I think today we should be focusing on the 116.10 level. I want to give you guys, make sure you guys have something actionable for today. Because if we break 116.10, that to me, suggests that the dollar index is ready to make a further recovery. Now, let's not forget that the dollar index is on long term. Like when I say long term, I mean, I'm talking over 10 years worth of support. Let me get over to the dollar index really quick. So you can see like a, long-term support. This comes all the way back in 2011 to basically where we're at today. I mean, we're close, not on it, but we're pretty close. So with that being said, let me go back over to the euro. So we know that this 117, 118 level, really critical. But if we start breaking below 116, I think that opens the door, back towards the 114s, somewhere in that neighborhood. The flip side to that is if we have, whoops, I didn't want to do that. If we have some weak data and you see the euro, coming back to the 117 and a quarter level, if we start getting above 117.40, this is where it turns bullish. And I've been wanting to sell the euro at 119, 120 for quite some time. And I think if we can get above 117, 30, 40 level, that opens that door for a breakout to the upside, or a fresh low in the dollar index, which, Dale, I know we've talked multiple times and we've said it here over the last couple of weeks. If the euro, does break out to the upside, it's probably gonna put in a fresh low in the dollar index, but
Yeah.
more importantly, it's gonna set us up for a level to be on the long side of the dollar. If that
Yeah.
happens, that means, if the euro makes it up to 119, 120, I am going to be looking for a short. And I outlined all this on the week ahead video that I filmed on Friday of last week about, being on the short side of the euro up at 119.50 if we see it. Now, I
It's
think the
going to be
breakpoints.
interesting for me is if it gets up there where the RSI is. I'd like to see it stay under 70.
Oh,
Uh,
I'm assuming it would. Yeah,
yeah, and that would,
I'm
and you
with you.
see that the high before that, it did confirm that high. Now go down to the RSI, so that was a confirmed high. So that's why it's a big deal. There'll be a daily divergence, which it did not do before this pullback, which made it possible was just consolidation based on my momentum work.
Yeah, I mean, I'm with you, Dale. I mean, technically, I think the setup is there.
Yeah,
And one of the other things we have to take into account, and we don't know right now, are the whys. Why is the dollar selling off? Like, if the economic data is weak, but it's not like horrible weak. Like, let's say we create 20,000 jobs instead of 75,000 jobs, unemployment rate ticks up, and then the euro starts making the move. I'd be more apt to fading the euro on a breakout sometime next week, up at
yeah,
119.50. Now, if we lost 200,000 jobs and unemployment rate ticked up to 4.4%, that's a completely different reason. I don't know if
Friday's the day.
I
Yeah,
don't, yeah, I
Friday.
don't know if I'd be willing to fade the euro or, start buying dollars as a result of that. So you have to understand the reasons why we're there. As we talk to so many traders and we've touched so many traders over the last 20 years. I know I have retail traders. It's easy to teach people how to read charts, but if you don't understand the reasons why something is happening, then it's like trying to drive with one eye closed. Drive down the road at 70 miles an hour with one eye closed. It's very difficult to do and very dangerous. And so understanding the whys we get to where we're at is super important. Hey, Kman, I know we just have a couple of minutes. I kind of outlined the break points for the euro. Any recommendations today for trade? I know you already talked about the yen pairs, but is there
Mm.
one in particular you're just like, I'm really laser focused here today?
Oh, not really. No, no. Actually, I'm having my preferences in case we have good data, in case we have bad data. I think if we have really good data coming, although the jolts, there could be a bit of distortion due to maybe migration or things like that. But yeah, I think good data. I think the dollar yen could push through. Maybe cable going for a retest. There's an interesting thing though on the cable because okay, it's been hammered a couple of days now due to that due to the gilt market, right? And but every time we went under that 133.65, it's tried three times, and every time we ran into sellers, ran into buyers, sorry. Probably some take profit buyers also on short sterling, but I think that 133.65 level in the cable is still very valid. But if we really have good numbers out of the States, this could be toast before the end of the week. So sterling still of my perhaps weaker currencies in case of good numbers in the States. If we get weaker numbers, I think Aussie goes through, and yeah, euro dollar at least retesting 117.50, 80 or so. But really, I'm going to play it by ear. No, yeah, that's it.
So,
I'm always ready to trade something, but I'm not like 100% laser focused on something. I still find yen crosses very bit. I still find them very bit. I mean, despite all that sterling selling off, look at sterling yen. We're still only like a whisker away from 200, and that to me tells me that it's still extremely bit.
yeah,
Extreme.
yeah, it is really, really close to some critical resistance there.
And that's
Oh,
going on
wow.
with all the yen crosses. That's going on
Yeah.
with nearly all the yen crosses. Yeah.
Well, thanks, Kman. I know Dave Keller's here. I actually had an opportunity to meet Dave in person in Las Vegas earlier this year. So I'm a big fan of Dave Keller. Make sure you guys stick around for his technical prowess. I do want to point out one last thing. There's a lot of people are barking about 30-year yields are at 5%. But take a look at the ZBs. This is the actual contract. We're at the 618 retracement. We're at some pretty big support down here. Before you get too carried away with, oh my God, borrowing costs are going to go through the roof and you're going to see yields, really spike. Just realize that the 30-year is near like a lot of technical support on the ZBs. That's kind of important to understand.
Good
Not
luck.
saying that yields won't go higher and you won't see the bond markets actually break down. But before you get too excited, I would just keep an eye on this chart here. I'm sorry, Dale, didn't mean to.
I know it's good luck.
Yeah, yeah.
And
Just
if
so
it
it's
breaks
just
down, then we could see new lows.
then if it breaks down, then
Yeah,
you should be screaming about yields
yeah,
ripping.
yeah,
Absolutely. But before you get too carried away with that narrative,
right.
just know that we're at some pretty critical support here. All right. So anyway, guys, I want to thank everybody for being here today. I do want to say this though. If you have not signed up for our newsletter, you go right to Forex Analytics, click right in the middle here. As you guys know, most of you know, trading analytics is coming. If you want to be updated every week well, just join our newsletter. But by joining our newsletter, it's free. Just put in your name. We're giving away things. We just gave away a trader funding program, $25,000 assessment. We gave away a 30-minute coaching session with. I don't think they've selected who they want to meet with yet. We gave that away this last month. This month we've got more giveaways. So as we launch trading analytics at the end of the year, so near the end of the year, so make sure you get signed up for that. I know many of you will put in multiple email addresses to get more entries. I can't stop you from doing that. So
Look at
with
that
that,
lunar eclipse on the calendar, and we're having one the 7th.
yeah, and the lunar eclipse with trading analytics were happening right
Yeah,
here. Yeah, I
yeah,
know. And
I
that,
like it.
and that's something. All right, hey, everybody, have a great day in trading. Remember, it gets busier as this week goes on, as we have the pinnacle comes in on Friday for the jobs report. But don't forget that today there could be some big moves brewing today. Tomorrow, with all the employment data we're getting tomorrow, is going to be a big one. We have Canadian jobs report at the end of the week too. It's not just all about what's happening here in the States. So, with that being said, I'm going to pass it over to you and Mr. Dave Keller.
Thank you, Blake. Welcome back, David. How are you?
I'm good. Good morning. Good to be back with you, Dale. How are things? All right?
Yeah, things are okay, Dave. Interested in what you're seeing. We've had it's like a beach ball, this market, isn't it? A great metaphor for, they have it underwater and it bounces back, and then you get a settlement case from Google. And yesterday it tried to break down out of a rising wedge, the
Yeah.
S&Ps, and didn't. And then the Nasdaq 100 went back to previous lows, and it's a flat horizontal support level. Um, in fact, I think it's the first time in a while that NASDAQ didn't lead to new highs while the S&P's made new highs. What do you make out of that?
Yeah, so there's so many different things going on right now, Dale, to be sure. Two different important things you mentioned, and then a bunch of other things we can talk about too. But number one is the price action in the S&P yesterday, I think was pretty important. And you'd mentioned this rising wedge, right, which is a classic technical price pattern where you have an uptrend, and then you have this kind of narrowing of
Yeah,
higher highs and higher lows, but just the two lines are gonna convene here down the road. And so we're kind of narrowing, we're kind of bringing the volatility in a little bit. And so yesterday, kind of mid-morning looked pretty negative because we had
yeah,
broken below that lower support. But what happened into the close, I think, changed the configuration or changed the complexion of what we saw yesterday. You saw buyers coming in, going into the end of the session, and so that really became more of a hammer candle, more suggesting there's some short-term optimism and buying on weakness. So I don't think while earlier in the day it looked like that was a pretty valid breakdown, I don't think you can sort of check that box off just yet.
no,
So
you
I'm
can't.
I'm focusing a little bit more on follow through. So I have this line right around 63.40, we'll call it. And I
Yeah,
think breaking below that, breaking below the 50-day moving average, that's when things you can legitimately say things are getting worse. For now, it still feels just noise.
yeah. I did, I was saying to Blake that I don't know if we're going to make a new high. We could, but there's one thing I learned from yesterday is I have a bull bear line under
Yeah,
yesterday's lows across the board. So
yeah, yeah.
and we didn't know that till yesterday. So that's the new information.
That's right. That's right.
That's so critical that low to hold, and if not, I
Yeah.
think the correction's underway.
Yeah, that and honestly, this is a classic way of using candle patterns. And Steve Nissen years ago, who
Oh
really is
yeah,
credited with,
yeah,
introducing the West to or to candlestick patterns, would always say those 1 or 2 bar candle patterns have a built-in stop to them. So anytime you have a hammer candle, you really want to focus on that low. Same with like a bullish engulfing pattern or any of those other kind of, patterns. That's why a lot of times I see a pattern like that, I immediately draw a horizontal line away from there because I've learned that those levels have meaning. It's often like a pivot point. So I would wholeheartedly agree with what you said. And it's also worth noting, by the way, that going into that high a couple days ago, still on weaker
there,
momentum. And I
yeah,
think that's probably the biggest concern I have besides the lack of support from the Nasdaq 100 that you mentioned, sort of a
yeah.
non-confirmation there. The fact that these new highs are coming on weaker breadth and weaker momentum, I mean, glaring, pretty clear. It almost jumps off the chart to me, at least.
Yeah, the momentum does, but didn't Breath just make new highs a week or so ago to confirm the advance?
So it depends on what measure of breadth you're looking at, right? So
Okay,
these are the advanced decline lines for the New York Stock Exchange, and then the
okay,
S&P 500 large caps, S&P mid caps, and then S&P small caps on the bottom. And you
okay,
can see that the S&P 500's advanced decline line has made a new all-time high. It made
yeah,
one in August, but none
right,
of the others confirmed it. And I think
interesting.
that's something that's standing out to me in the month of August is the NYSE's advanced decline line, which is probably the biggest, broadest universe that I'm showing here. Hasn't broken out yet. The mid cap advanced decline line actually broke below its 50-day moving average yesterday, and the small cap one is right about there. So, these are not horrible readings, right? It's not telling you that breadth is in a full decline, and most stocks are above their 50-day moving averages and all those things that are good signs. But I'm getting lack of confirmation, right? When the S&P or the Nasdaq are breaking out, and then all these other kind of supporting indicators are not. That just I've learned to be cautious in this sort of configuration.
Okay, so we were talking about candlesticks and gaps. The gap that we had down in TLT yesterday, led by a rout in the gilts
Yeah.
because of a cabinet move. Does this gap, unless it's filled, could it be a breakaway or just a common area gap? What would
Yeah, I don't know if it
determine
was
that?
Blake's chart or whose chart we were seeing, but someone I
Yeah, it's
saw
Blake.
had, I think the
Yeah,
bond futures, and we're showing a similar trend line. I'm using the TLT here for bond prices, but
right.
very very tracks very similar. And I think that trend line off the May and July lows is an important one to watch here.
Yeah. Yeah.
Anytime you have like a big gap, drawing some trend lines can help you just put it into context, right? And just understand what's happening. But if what you mentioned about this gap, Dale, I think looking back to this gap that we had at the end of July might be a
Right.
good kind of cautionary tale, right? We had this gap higher, which
Yeah.
felt very bullish for bonds for about 72 hours. And then
Right.
look at how quickly that gap was filled, which really suggested that was the end of the move. And now we're coming back and rotating lower. So I think what happens immediately after this gap usually is super important. So,
Yeah.
for me, I'm probably going to just draw a little area right here, covering this gap, and then focus on that trend line. One of those is going to break here probably through the course of this week. And I
Oh
think
yeah.
whichever way we break, that's the next direction of momentum for bond prices. And that could be a pretty pivotal moment for sure.
Okay. I started a campaign trade in the widower maker, natural gas. I was wondering, not the widow maker, Dave. I'm changing the name to the widower breaker because the husbands are going to make so much money, it's going to give their wives heart attacks. So it's going to be the widower maker.
I
So
like it.
I was wondering if there were any stocks or ETFs in that sector that when you like natural gas that you trade. So you trade
Yeah, so when you're
UNG.
thinking of like natural gas and other things, you often have, especially as an equity investor, you usually have a couple different choices, right? You can go futures, ETFs, you can do individual stocks and all of these. For me, the names that have often made sense are sort of these, infrastructure names, the pipeline names.
Okay.
So, when I'm thinking about natural gas, I immediately go to something like Williams. Those would be the ones that I would be looking at. LNG is another one that immediately comes to mind. These stocks aren't looking particularly strong just yet. Williams is kind of
No.
at the lower end of the range. LNG is actually pretty close to breaking out. So on LNG, I actually have an alert set for over 245, which is, I mean, really where we've been at here for the last couple sessions. So,
Okay.
for me, I'm more of a breakout trader. So I'm looking for a push above 245, which would be like kind of a classic entry point for me. But the chart of natural gas, I was showing the UNG earlier. It's
Right.
obviously been in a primary downtrend for a while, but it's showing a nice initial bounce off of the lows. It's
Yeah.
just testing the 21-day exponential moving average, and that's often an initial entry point. When I have something that's been in an established downtrend, that's usually the beginning of a recovery, and
Yeah.
something I'd be looking for here in the coming sessions.
So the reason we're at new lows is because of the expenses of the ETF, because the low that we had in November in Nat Gas, we're putting in higher lows on the Nat Gas
Yes,
in
yes,
here.
yeah.
So, that's the disadvantage of these ETFs is the costs and the hedging and whatever else they do.
And also the premium and discount, which can often be a confusing thing to get your head around,
Yeah,
right? Where things trade
yeah,
further and further away from their net asset value, that's an issue as well.
yeah. Well, I think even a bear market rally could take it back to 16.
For sure, for sure.
And so that's what I'm thinking. I wanted to ask you about what you're doing as far as NVIDIA. It
Hmm.
started to act poor. It had all kinds of divergences. We actually had a gap down yesterday, a lot of
Yeah,
gaps.
yeah.
I don't know how big the gap was, but I think we're coming in higher. Is this just a simple ABC and we're just going to blow to 185, 195? Or is this vulnerable for a move to 150, 140? Um, are we going to see the first signs, even though it's probably not the end of it, of people? There's some talk about the AI bubble out there now, and all these companies have poured billions into it, and they're really not getting much of return on
Yeah,
investment.
yeah.
Could we see Nvidia um, shake things up a little bit this September?
I mean, so from sort of the big picture perspective, Dale, what we have to remember is that there's a big difference often between the promise of a new technology like AI, the transformation it's going to, I
Right.
mean, it's already obviously changed the way that all of us operate. I mean, I used ChatGPT a couple times already this morning, doing quick research and things like that. And so it's definitely changing it. But does that mean specific stocks are going to be leaders and or are going to be able to profit from the growth in this technology? And that's very much an open question right now. And I think NVIDIA's earnings most recently sort of, I think maybe a wake-up call for a lot of investors, just sort of assuming that this kind of trade just keeps going up forever. At some point, trades like this, get you lean way too far over your skis, and the promise of the technology, sort of overcomes or over is overemphasized versus the ability of these companies to actually generate earnings based on this, and the costs being thrown into this are extreme. So that's all sort of the challenge, I think, to the AI trade. There's no doubt in my mind that AI related themes will be fantastic for many, many years to come, but I don't know if that means
Yeah,
today is the right day to buy Nvidia. And I
yeah,
would say from a technical perspective, you can see that there's been a very significant change in the chart of NVIDIA from May, June, and July, which were
yeah,
primary uptrends,
right.
higher highs, higher lows, moving averages all sloping higher, momentum strong, relative strength improving. Like these are all classic bullish phases. And
Yeah,
everything that I just mentioned changed in the month of August. NVIDIA
yeah,
has gone from making higher highs to, kind of static or sideways action, with 185 becoming kind of the new ceiling, which has been tested a number of times here. The momentum, similar to the S&P and the Nasdaq, leading stocks like Nvidia, each one of these tests of 185 have come on weaker momentum. And so what that means is just the days in the middle of this sideways action, there's just not a lot of accumulation signs. It's more equilibrium, right? It's more buyers and sellers kind of being in balance. And so the threat here is you actually break down, and that's what yesterday almost did, and very,
right.
very close. And so for me, I had an alert set for 170. So yesterday morning, my alerts start firing up saying NVIDIA breakdown because I'm watching the 50-day moving average. I'm watching that swing low back here, a hammer candle like we talked about
Yeah, yeah,
earlier. Same idea here. And so we traded right there. Ended up being kind of a flat day with the open and close very, very close to one another. So I don't know if I'm comfortable declaring that a breakdown because it was really more of a stalled out kind of gap lower. I think today's session is super meaningful. And if we do get a bounce off of 170 today, I think we go to 185. I think that's a great swing trade opportunity, which I would be a fan of. However, if we start to break down here and we break below 170 and the RSI pushes below 40, which is right where we're at, that's where Nvidia, you no longer can say that that's in a primary uptrend on that kind of medium term time frame. And then I think it's better playing it at least on the short term on the short side and looking for a more meaningful low with signs of accumulation to play the next leg higher. The problem with stocks like Nvidia that had such a run off the April lows, they have a lot of room to come down and still probably be able to recover from that and move on to new highs down the road, maybe in the fourth quarter. But I think
yeah,
September ends up being a difficult period here, most likely.
yeah. What is that? A 200 day coming in around 140. There's gaps there. I bet it's a
Yeah.
fib. I bet it's a fib number.
Yes.
And then it blows off one more time.
I was going to say, so there's all this space from 170 to 140
Yeah,
that, again, using the 200-day moving average as kind of a general proxy for the long-term trend. That's a
yeah,
lot of space for Nvidia to come down, have a meaningful pullback, but still be able to recover and rotate back higher to new highs. It could be a volatile space there, and it's worth noting that. I mean, a lot of other semiconductors don't look this good, right? They look a lot worse. They're actually leading even further. Nvidia is kind of holding up better than others.
yeah. Even SMH, I think, is looks heavier.
Yeah.
Could I ask you, Forex trader? I don't know what you're going to tell us. Tell us about gold, Dave. How bullish is it?
Yeah, so gold's a pretty bullish chart, right? And if you think about what we just talked about with Nvidia, right? We had a
Yeah,
similar uptrend a little earlier in the year for gold, and then we've had this big sideways trend that's really lasted for about 4 to 5 months. So gold hits $3,500 an ounce. We haven't seen that again until yesterday when it finally broke back above 3,500. I
yeah,
mean, full disclosure, I have a decent position in the GLD and IAU. I use mostly ETFs. I don't use a lot of futures. And so I'm making decent bets in physical gold ETFs, which are as close as you can get to, holding physical gold as an equity ETF investor. And I've held on to that because the action has been sideways but not negative. So you're not really seeing a lot of breakdowns in price. You're seeing a narrowing of the range of higher highs and higher lows and lower highs, kind of narrowing in a little bit around 3350, 3400. The momentum has been neutral. If you look, the RSI has been kind of fluctuating between 40 and 60. So it's really just telling you there's sideways action. We're waiting to gather more data. And I think we got more data with that breakout to the upside. So the fact that gold's breaking out, I would caution equity investors of saying, all right, this is really bad news for stocks that gold is breaking out because, I mean, look back to January and February. There are plenty of times where gold and stocks can both go up. I don't
Yeah.
think you can bet on that relationship as much as some people think.
In fact, they have been overlaying S&P chart on top of that.
Yeah,
It's all been one market. It's just
yeah,
been different magnitudes, except for the debt market. But risk on has been, long gold, long the
yeah,
market, long
yeah.
silver. I guess the key is going to be, um, what do you think about the dollar? We had that little bear market or that nice pop from 96, and people said the rally off that Dixie low was three waves, so it implies a new low coming in the dollar. Does the
Yeah.
chart look that way to you?
Yeah, so for the dollar, it's really sideways at this point. So from a technical perspective, I see this as an absence of momentum. If you look, the RSI
Yeah,
has been almost exactly at 50 for the
yeah,
last month.
it's a
And what
range.
this indicator here is telling you is basically up days and down days, right? Which are stronger. And if the RSI is consistently at 50, that just means the up and down days over a period of time are pretty much even. So you don't have buyers or sellers really taking control, right? There's no real dominant force in the market. And so it's really telling you to wait. It's telling you to wait and see. So the structure of the dollar is kind of between 97 on the lower end and 100
Yeah,
on the upper end. I
yeah,
see this as range bound until and unless we can kind of break out of that. So I have alerts set for the dollar index above 100, which I think unlocks the 200-day moving average and suggests a
yeah.
much stronger dollar than we've seen.
Okay,
But this initial rally off of the end of June has really stalled out here, and so I'm looking at 97 on the lower end, and for now
okay.
remains neutral. I don't think there's a strong technical argument just yet. It's definitely not going down anymore, which is a change from what we saw in the first half of the year for sure.
Okay, there's a guest in the room. His name's Dale Pinkert, and he'd like your analysis on Uber.
All right. Long time watcher, first time caller. Thanks, Dale, for participating. Okay. Yeah, so Uber and other, right? So the challenge that you're going to find looking at a lot of stocks, and Uber is a perfect example of what we're seeing in a lot of different sectors right now, and especially in technology. These are stocks that have had really good runs off of the April low. And then in the month of August, August seasonally is a pretty weak month. And August ended up being fairly okay, right, for stocks, but you really didn't get a lot of significant breakouts, right? In May,
Yeah,
June, July, we're talking about all these new 52-week highs, new all-time highs. You didn't see a lot of that in August because a
yeah,
lot of charts looked kind of like Uber, where we're testing a previous
yeah,
resistance. And that
right,
often is an indication, right? A double top pattern is what we probably classically call that, which is basically a sign that the uptrend is running out of steam. So what happens in this situation, you have two choices. Number one, you start playing that as resistance and you start selling, prices up here, and you're basically betting on a retest of that swing low, or you're just waiting for the break above 97.50. And that's kind of what we saw in the chart of gold, right? We had a clear
right.
resistance level that was finally broken. So if you don't own Uber, right? If I don't, and I don't own it personally, I'd probably be waiting for
You're
some
the
sort
only
of
one.
breakout.
Yeah, everyone that loves it.
Yep. Oh yeah.
It looks like under 90 that just like the space we showed where we could mean revert, that the
Yes.
mean reversion would be about $80 if we take out this, because both of those moving averages, to me, it looks like, if we don't hold here, it's pretty vulnerable, especially how long the market is.
Yeah, so in a healthy bull market, you expect pullbacks right along the way, but you don't want to break much below the 50-day moving average because then that tells you, all right, it's no longer a good uptrend. This is now something
Yeah,
different. Like in back here, like in fourth quarter of last year, you see kind of what that looks like. We don't hold
yeah,
the 50-day, and it's like, okay, that could be the beginning of something worse. So I think we're at crucial support right here. And if we would break, I would be looking around 85, 86 as maybe an initial
yeah,
level of support. But
right.
but again, I all of these stocks are showing weaker momentum readings in August. And what we haven't talked about, Dale, maybe the most important thing, September is the worst month for stocks, and it's not even close. And that's going back for the last 50 years. If you look at post-election years, if you look just since the COVID low, September has rarely been a good month for stocks. It has happened, but it is way more common that September is a big pullback month, and it sets us up for a nice fourth quarter rally. And that's kind of the base case I'm working with now, which means charts like Uber probably don't hold up much longer if that seasonal tendency would play out as expected.
Yeah, I'm looking for a September to remember.
Here's
Uh,
hoping, right?
yeah, or else the other extreme is wake me up when September ends, Green Day.
Yeah,
Right?
sober in October is another one I've heard, right? So
Yeah.
that might be the time.
Well, I always appreciate your uh, tactical and looks and the technicals, the work that you do, David. I know you do a lot of things in spaces, and best way for people to follow your great work. What do you suggest?
No, I appreciate it, Dale. It's always a pleasure. Look forward to these conversations and appreciate what you're doing with your show to keep people informed and thinking about some of these movements. Marketmisbehavior.com is my website. I have a YouTube channel, a podcast. My goal is to help people make better decisions using technical analysis and behavioral investing tools. So we talk about what happens between your ears. That's called behavioral finance. And we talk
Yeah.
about how to understand the world around us. That's called technical analysis. So we try to hit a little of both and hopefully we all improve our market awareness, make better decisions.
Well, David is a perfect example of that you can't learn experience. That only happens with the passing of time, but you can learn from the experienced. And
Oh,
David and David has a lot of knowledge to share. And you want to become a good technician, he's a great source for learning. Plus, his demeanor for not being excitable and being rational about the markets is also an edge. So I respect your work, David. Thanks for
I,
being with us.
the respect is mutual, Dale. Have a great one, and I'll talk to you again soon. All right,
All right, see you in the fall. See you around Turkey Day. All right, buddy.
sounds good.
All right, my trading warrior brother, David Keller. Follow him on X at David Keller CMT and go to Market Misbehavior. And David's always doing some shows on X. Drop in and pay attention. You'll pick up pearls every time you listen to him. So that's a wrap, everybody. Uh, Hope you have a great day. And tomorrow's Thursday. Okay, so we have a couple of days left, and the big kahuna is Friday. So good hunting. Keep an eye on the widower maker, and don't just count your tanks of propane and Nat Gas. Count your blessings. See everyone tomorrow. Adios. Join the team in 17 minutes on the morning edge so that you have an edge.